Artificial intelligence (AI) is rapidly reshaping the landscape of personal finance and investing. From streamlining budgeting tasks to driving complex trading algorithms, AI's presence is now deeply embedded in financial technology. What once required hours of manual input or professional help can now be handled instantly by AI-powered tools. These advancements are not only improving accuracy and efficiency, but are also making financial tools more accessible and affordable for the average consumer. AI has essentially begun to act as a virtual financial assistant, investment advisor, and fraud detector, all rolled into one. Today we will talk about how AI is changing personal finance and investing. So before we start, make sure to hit the like button and subscribe to my channel. Smart budgeting and personal finance management. AI is transforming how individuals track spending and manage budgets. Popular applications like Mint, YNAB, and PocketGuard use machine learning algorithms to automatically categorize transactions, recognize spending patterns, and offer personalized suggestions. These systems learn over time, becoming better at forecasting cash flow, suggesting savings goals, and alerting users to unusual expenses. Some platforms even use natural language processing, allowing users to ask plain language questions like, "How much did I spend on groceries last month?" and get real-time answers. This personalization makes it easier for users to make informed day-to-day financial decisions. Automated investing and robo-advisors. AI-powered robo-advisors have revolutionized investing by offering algorithm-driven portfolio management at low costs. Platforms such as Betterment, Wealthfront, and SoFi Invest gather information about a user's financial goals, risk tolerance, and timeline, then construct a diversified investment portfolio accordingly. These systems automatically rebalance portfolios and can even employ tax optimization strategies like tax loss harvesting. This has made professional-grade investment advice and management available to a wider audience, breaking down barriers that previously favored only high-net-worth individuals. AI in credit scoring innovation. Traditional credit scores are based on a limited set of financial behaviors, which can exclude many creditworthy individuals. AI is expanding the way lenders assess risk by including non-traditional data such as rental payments, utility bills, and even social media behavior. Companies like Upstart and Zest.AI are developing credit models that evaluate borrowers more holistically. This has the potential to increase financial inclusion by providing access to loans and credit to people who may have been unfairly marginalized by older scoring systems, such as young adults or immigrants without an established credit history. Fraud detection and financial security. AI is also enhancing financial security by enabling more sophisticated fraud detection. Financial institutions and fintech companies use machine learning models trained on millions of transactions to identify patterns that suggest fraud. When anomalies are detected, such as a purchase in a foreign country or a suspicious large transaction, AI can trigger immediate alerts or freeze the account. These systems learn and evolve, reducing both false positives and missed fraud attempts. As cyber threats grow in complexity, AI will continue to be a key tool in protecting consumers' financial data. Algorithmic and high-frequency trading. In the world of investing, AI is transforming how trades are executed and portfolios are managed. Hedge funds and institutional investors leverage AI for algorithmic and high-frequency trading, HFT, where trades are made in microseconds based on real-time data analysis. These models analyze a wide range of data, price trends, earnings reports, economic indicators, even satellite imagery, to spot market inefficiencies and profit from them. While this level of trading is typically reserved for professionals, some tools are becoming available to retail investors, allowing them to access AI-driven trade signals and insights. Market sentiment and news analysis. Another significant breakthrough lies in AI's ability to perform sentiment analysis. Financial markets are influenced not just by data, but by investor sentiment, news, and public opinion. AI can scan thousands of news articles, tweets, blogs, and forum discussions in real time to determine market sentiment. Natural language processing enables these systems to interpret whether the tone of a given text is positive, negative, or neutral. Investors and fund managers can use this analysis to predict market reactions and adjust strategies accordingly. This is especially useful during volatile periods when public opinion can sway market prices rapidly. Virtual financial assistants and chatbots. Virtual assistants like Clio, Plum, and Erica Bank of America's AI Assistant. Use AI to engage users in real-time financial conversations. These chatbots can notify users about low balances, upcoming bills, spending trends, and saving tips. By acting as a 24/7 financial coach, they provide users with immediate feedback and support without the need to call customer service or visit a branch. For financial advisors, AI tools also provide back-end support, offering predictive analytics, modeling different investment scenarios, and giving them more time to focus on personalized human interaction with clients. Retirement planning and long-term projections. AI is making retirement planning smarter and more adaptable. Traditional retirement calculators often rely on fixed assumptions about inflation, investment returns, and expenses. AI-enhanced tools like SmartAsset and New Retirement personalize these projections by analyzing actual user behavior and real-time market conditions. They can simulate thousands of possible future scenarios and adjust the retirement plan accordingly. These tools help users better understand how decisions made today, such as increasing savings or delaying retirement, can affect long-term financial outcomes. Ethical concerns and algorithmic bias. Despite the advantages, AI in finance also presents serious ethical concerns. One issue is algorithmic bias, where AI models, trained on biased historical data, may reinforce systemic inequalities. For example, if a lending model gives lower credit scores based on zip codes historically linked to lower income or minority populations, it can unfairly disadvantage entire communities. The lack of transparency in AI systems, often called the black box problem, also complicates accountability. Regulators and developers must work together to ensure AI models are transparent, fair, and regularly audited for bias. Data privacy and user consent. With great data comes great responsibility. AI systems require massive amounts of personal and financial data to function effectively. While this can enhance performance, it also raises concerns about data privacy and misuse. Users often don't realize how their data is being collected, shared, or sold. Though regulations like GDPR in Europe and CCPA in California have introduced consumer data protections, more comprehensive global standards are needed. The future of AI in personal finance. Looking ahead, AI is expected to play an even more prominent role in personal finance. We may soon see hyper-personalized financial planning that accounts for emotional triggers, real-time spending behavior, and lifestyle changes. Fully automated tax filing, AI-driven insurance comparisons, and predictive mortgage qualification could become standard features. As AI becomes more embedded in financial ecosystems, collaboration between technologists, regulators, and ethicists will be essential to maximize its benefits while mitigating potential risks. A new financial era. AI is undeniably reshaping how individuals interact with their money. By making budgeting, investing, lending, and financial planning smarter and more accessible, AI is democratizing financial tools once reserved for the wealthy. It offers convenience, efficiency, and enhanced decision-making, but also introduces new challenges related to ethics, transparency, and data protection. As long as these issues are addressed with care, AI has the potential to usher in a more inclusive and intelligent financial future, one where everyone, regardless of income or background, can make better informed financial decisions. AI and personalized financial education. Another emerging benefit of AI in personal finance is its role in personalized financial education. Traditional financial literacy resources, books, seminars, or generic websites often offer one-size-fits-all advice. In contrast, AI-driven platforms can deliver tailored educational content based on a user's financial behavior, goals, and gaps in knowledge. For example, if a user frequently overdraws their checking account, the AI can offer targeted lessons on cash flow management or suggest switching to an account with overdraft protection. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.